because you finished before the time. That's amazing. That's not the Israeli way, though. You should know that. Okay, so I'm going to call the next speaker to the stage. Rory O'Sullivan. Is he here? Oh, he's here. Managing Director, Pagemill Partners at Duff at Phelps. Rory, the stage is yours.
Many thanks, Manny. Great, it's a pleasure to be here. Many thanks for the invitation, and I'm excited to be here again and to share with you a very quick, brief perspective on what we're seeing, some of the themes, investment and partnership themes in fintech and cybersecurity. So just a quick introduction. Pagemill Partners is an investment banking firm. We're based in Palo Alto, London and Paris. The firm is an advisor on mergers and acquisitions in the technology sector, and we're traditionally working with entrepreneurs, growth companies and their investors, disruptive businesses. So as you can see, we've had a good track record working in Israel, companies such as Liquid Machines, EurekaFi, AcceleWeb, Mysticom, and in the fintech and cybersecurity space have completed a number of transactions with some of the main acquirers in the sector, from Checkpoint and Cisco, Intel, Fortinet and others. So what we see in the overall market is strong activity in cybersecurity mergers and acquisitions, and the chart here on the top right highlights some of the data points which point to effectively a doubling in overall cadence of deal count. Last year, 120 deals, effectively 2 deals a week in cybersecurity M&A, up from 66 or so 10 years ago. This year, we expect that to increase again to an all-time high of 140, and deal value again pretty much double where it was about 10 years ago. So 11 to 12 billion dollars worth of deal value a year. Valuation data points in the bottom left. I won't go too much into that. We can speak offline, but the key metric is the revenue metric, which averages about 5 times revenue consistently over the last few years. There's a big divergence, but based on growth rates, based on a number of factors, but 5 times is kind of the average. And then what we've seen an acceleration of, and some of the recent deals in the bottom right point to that, is an increase in fintech-related cybersecurity investment and activity between ThreatMetrix getting acquired by Relics, Reed Elsevier Group, Iovation's acquisition by TransUnion, and a number of others. We've seen a real acceleration in deals really driven by specific fintech applications of cybersecurity. And what's driving that? Well, the first driver is the fundamental rule in investing, which is go where the money is. And just to put things in perspective, we're all familiar with some of these themes, but we're living through a massive disruption in fintech with a transfer of value and creation of value by fintechs, and transfer of value from the incumbent financial institutions. A couple of examples of that are PayPal, which is now touching $100 billion in equity value, worth well in excess of American Express. The stock price is up over 100% since the IPO. And then more recently, Adyen, which is also up over 100% since the IPO after just a week, and they're trading at $14 billion. So some real huge amounts of value being attributed, being recognized, realized, and created in the fintech sector. That's been recognized by some of the venture investors for a long time. some of the most active venture investors you've had earlier here on the panel. But to put into context, $16 billion invested in fintech last year is an all-time high, and you've seen the growth in that again, doubling just the level of activity over the last 5 years. What's interesting is the fastest growth last year, over 100%, is from Europe, the Europe and Israel region. So that sector has grown dramatically just in the last 12 months. And aligned with that has been a acceleration in exit activity. So venture investors need to see returns from the investments, and last quarter of 2017 saw a record high in venture-backed exits from the fintech sector. Some of the recent deals since then are highlighted here. So in 2018, we've seen iZettle getting acquired by PayPal for $1.4 billion, which is adding to the close to $2 billion that one fund Index has made just from fintech investments this year between iZettle, Adyen, and Funding Circle, which is expected to IPO. Some of the other deals, Layer 6 getting acquired by TD Bank, WePay by JP Morgan Chase, indicate the increasing level of activity by banks in acquiring emerging companies in the fintech space. So why now? What's driving some of this activity and value creation? One of the reasons for that, as you all know, is the disruption in technology stacks. So in the old world, we used to get money from a cash machine. We used to pay for stuff we bought at a point of sale terminal in a shop. These days, we have our wallet on our phone. We have the retailers using Stripe. There's no requirement to rely on the legacy infrastructure, and that goes also. That disruption is also applying at the back end between Plaid and Amazon Web Services, displacing some of the legacy infrastructure. But with that disruption and with those new technology stacks, there's a massively expanded attack surface for threats that fintechs and banks need to protect, and that's indicated by the explosion in growth of APIs published on programmable web, which fintech APIs, including monetization, payments, and banking APIs, is by far the biggest sector of published APIs. That's grown to close to 2,500 over the last few years. And in parallel with that, you've seen a proliferation of partnership trends between open banking, between Payment Services Directive 2, the IoT. All of these are leading to a massively interconnected financial world, which creates more opportunities for attacks. So partnerships are the way to address some of these themes. US banks are not alone. Many of the European banks and Asian banks have recognized that they need to partner with emerging companies. I was at Money 2020 just 2 weeks ago, and it was astonishing the level of senior attention from CEOs of global banks coming to understand what emerging companies are doing in the space and partnering with them. So this highlights some of that investment activity. Citi, JP Morgan Chase, both active here, as is Goldman. And these are just some of the investments, some of the announced investments that have been made over the last few years. But they can't stand still. In fact, the most active acquirer in the fintech space this year is not a bank, but Coinbase, which was only established just a few years ago. They've completed 7 acquisitions already just in 2018, and some of these for triple-digit millions of sums. So lots of activity, lots of investment activity coming from fintechs themselves. The trend towards US banks or global financial institutions, and it's not just banks but insurance companies, investing in fintechs has also resulted in a doubling of participation in investment rounds. So just under 20% of deals in fintech now include a corporate VC. That's a bank or an insurance company. And you see the sums here, a massive uptick in terms of the level of capital that was being invested just 5 years ago. So where does that leave Israel? Israel is very well placed, very much on trend here between the strengths that the country has demonstrated in cybersecurity, in analytics. Many of the companies have already been addressing the financial services sector. Historically, it's been one of the biggest addressable markets. So within fintech investments over the last 4 years, 194 of those 194 deals, 42% of those have been cybersecurity, with the next biggest sectors in RegTech, in data analytics, payments and remittances. So already very well placed, and some of the emerging and companies that have some traction in space are highlighted at the bottom here. So where do we see the themes for 2018? Cybersecurity is going to be increasingly in the spotlight as the fintech attack surface continues to expand. Some of those trends include the emergence of Internet of Things, the Payment Services Directive, open banking, partnerships between banks, insurance companies, and fintechs will proliferate and become the norm. We've seen that. There's no going back. Other things we expect to see blockchain use cases start to gain some traction. Still early days, but you've seen some of the investment activity. There's starting to be some interesting use cases. We'll hear, I'm sure, from some of the people speaking today about how Western e-commerce leaders, Amazon and others, are moving to a full stack approach to payments, and if anyone that's followed what Alibaba and WePay and have been doing in China can see that a full stack approach to payments and capturing more value is very much the way that we'll see things emerging in the West as well. And just finally, I think we all expect to see fintech leaders and banking institutions spend more time in Israel, as do we look forward to doing ourselves. Thank you very much.